Hi, everyone. Thank you for joining us today on a presentation about starting a business. I'm going to be presenting along with Chris Rini of Schmitz, Rini Associates. My name is Jennifer Myers, President of SageVest Wealth Management. I'll just give you a quick overview about who we are and what we do. At SageVest Wealth Management, we're a fee-only and fiduciary wealth management firm. We pride ourselves in providing proactive financial decision-making for our clients, where we're actively managing investments and providing comprehensive financial planning services, and really making sure that the one decision in your life makes sense, supporting others, and helping you to be a quarterback in that decision-making process. I'll turn things over to Chris Rini to let him introduce himself and a little bit about his firm as well.
Hi, I'm Chris Rini, Schmitz, Rini Associates. We have 3 partners, a staff of 10. We focus in 1040 individual tax returns, small businesses, and we do a bunch of state and trust work as well.
Thank you, Chris, for joining us today. We'll start off in talking about a number of things and starting a business. It all sort of begins with coming up with a plan, and then we'll move into more substantive and detailed matters in terms of the nitty-gritties. But it really all begins with developing an idea, setting out the stage of what kind of business you want to start, what are the types of products or services or both that you're going to be offering. Why is this something that you want to do, and making sure it's desirable to you and your life and your goals, as well as obviously why is it something that somebody would want to buy, whether it's a product or a service. In starting off and looking at your idea, it's really important, as one of the first things to think about is, what's the industry like? Who are your competitors? What are you going to bring to the table that's really helps to differentiate yourself and to help you succeed? Knowing with that, what are your strengths and where are your expertise to run a business? Because being a business owner is different than being an employee, if that's where you are today. And what can you really bring in terms of your strengths to run a business, in terms of doing what you're doing today, in terms of the role that you're playing, but also putting on that business hat. And then what we'll talk about also as part of this series is, what are your personal objectives for yourself, professionally, in your career? Where do you want to be a year from now? Where do you want to be 20 years from now? And how does this play into that? So beyond thinking about just the high level of what a business is going to look like and how it impacts you, you need to get into the nitty-gritties. And this is important for you to make sure that you launch well, and particularly important if you ever need business financing, because you need to have a business plan. And that includes a lot of details. There are some templates you can follow, but some of the key components are having just that high level executive summary of what the business is going to look like, what's its objective, having a mission statement and a vision statement. Where do you see the company going, and what's the mission of what you're providing? You then also have to have obviously more in-depth information about how the business would operate, the nitty-gritties of it, as well as some financial information. Obviously, if you're a bank and you're thinking about lending to a new business starting up, they want to look at your financials, and regardless of your financing or not, you need to know the financials, because that's obviously an important element of running a business. One of the things about becoming a business owner is that maybe you're in marketing right now, but if you're not, you need to become a marketer for your company. And looking at the strategies that you're going to utilize to help your company succeed and have a presence in the industry. As part of that, and everything that you're considering in starting or running a business, a key element in being a business owner is looking at what's called a SWOT analysis. What are your strengths? What are your weaknesses? What are your opportunities, and what are your threats? So that can be, what are the strengths in terms of the product that you're delivering, how you're going to be running the business, obviously what, any hindrances that you might come up with. relative to your competitors, and then looking at opportunities in the marketplace, if there's increasing demand for whatever you're offering, or if there are threats in terms of new competitors or economic elements. And then, as I mentioned, obviously the financial projections are very important, which we'll get into a little bit more in some of the nitty-gritties on these following pages. So obviously, in terms of starting to offer something, whether it's a service or a product, you have to put a price tag on it, and you have to think about what's a realistic price tag relative to somebody obviously wanting to buy that product. So there are a number of things that you want to consider in pricing, and we're going to go into some of the underlying elements that you also have to think in terms of cost structure. But before that, you have to look at what's the value that you're bringing to the table to justify the price that you're putting forth. Similarly, what's the quality that you're either offering in terms of a service? How deep can you go in the service that you're providing, or how durable is the product that you're selling? As I mentioned, we'll go into a little bit more of the costs entailed to support how much do you need to price a product or service to make sure that you can cover your costs. What's the market demand? How much are people interested in buying your product, and how affordable it is, particularly in different economic cycles. It's important to think about that. And then obviously looking at what are your competitors pricing at, and can you charge a premium for your product or services being at an elevated level, or might you need to price a discount depending upon where you want to be in the industry. As I mentioned, there are a lot of costs to consider that you might not be cognizant of if you are currently an employee in a company. We take these from some of the more basic ones to some of the more advanced, looking at what are your basic startup costs. And that might include equipment that you need. Even if you're not having an office or a factory, it might just be new computers. If you are going to have an office, obviously what rent might be entailed. If it's a product, obviously you need to have inventory to make sure that you can satisfy demand, and determining how much inventory you need to have on hand and how much cost outlay you need to entail to get to that inventory level to satisfy demand. Payroll. You might just be operating this business yourself, and you might even want to have payroll for yourself. But obviously, if you're going to have employees, having a structure that supports the mechanics of paying them, which Chris will get into a little bit more further in this presentation. There might be like legal or regulatory requirements. You might be setting yourself up as a sole practitioner, which does not entail quite as much. But if you're setting yourself up as a corporation, or if there are any regulatory impacts, depending upon your industry, there are costs associated with those. We'll talk a little bit more about insurance on the personal level, but you might also have requirements in the business to protect yourself, whether it's liability insurance, whether it's cybersecurity insurance. Obviously, if you're going to have employees, you need to have workman's comp insurance. There's a lot of elements there to consider. If you're going to have employees, what kind of benefits, and then tax impacts, which we'll get into further in detail. Also, in terms of pricing and looking at this business model for you and what it means to you, replacing your income is a big element of deciding if this makes sense. There are sort of the high level things to consider that we'll point out here. Obviously, your salary, any bonus or commission amounts that you receive, and stock grants. Those are the cash items that you're more cognizant of. But there are a lot of things under the hood that you also need to consider that may not be in your day-to-day paycheck, or you may not be aware of or look at. Those include things like health insurance. If your employer is providing your health insurance, and even if you're paying some of supporting your health insurance, you may not be cognizant of what the real cost is behind that. If you become the employer, what that costs. It's a significant item today. Retirement benefits. If your employer provides a match to your 401k or whatever type of retirement plan, you will be forfeiting that and need to replace it. Life insurance and disability insurance to protect you and your family. Something that a lot of people don't think about is downtime, whether it's vacation time, sick time, or just unbillable time to manage a company, particularly if you're going to be a consultant where you're billing by the hour. You can't assume that you're necessarily going to have 52 weeks a year, 40 hours a week, because there are things that you need to do, whether it's for yourself or for the business. Taxes, which again, Chris will get into in a little bit more detail, but there are additional taxes both for your income and for the business that you need to be cognizant of to cover those. And then, as I mentioned, any type of business insurance. Mentioning the matching component of that you might be forfeiting, you also need to remember that you need to not only pay yourself, you need to still start planning for your future. And as part of that, you need to have a retirement plan, or it's in your best interest from a tax perspective to have a retirement plan. There are a multitude of retirement plans that one can establish in terms of running a business and being an employee. We list 6 common ones here, and we start out with the more simplistic, straightforward, easy ones to set up. A simple IRA, inherently, as it says, is simple. It may not be as simple as you might expect. It can be set up for you and employees. It does have lower contribution limits, but it's a little bit more straightforward. There's also a SEP IRA, which again can be for you and for employees, that allows you to contribute higher amounts. And then if you are a solo practitioner, so it's just you running the business, or perhaps a spouse, but no employees, a solo 401k is a beautiful instrument that allows you flexibility in terms of how much you want to contribute, as well as some higher contribution thresholds. And then as your company grows, but perhaps not in the first year or two, looking at some more complex structures to capture retirement savings, such as having a company 401k that's available to you and employees, or if your income is reaching higher levels where you want to put more away than some of these other more traditional plans offer, looking at a cash balance plan or a pension plan that has distinctly higher limits for contributions. Coming back to that bigger plan, once you look at the pricing, the cost structures, really getting down to the financial elements, you need to then extrapolate those and look at not just the first year and getting started, but playing it forward and having projections for not just 1 year, but at least a few years out, perhaps up to 5 years out. And as part of that, you need to stress test, and you need to look at things such as, what if life just goes dandy and it's just as you forecast in terms of what the demand is, what the sales are, what your cost structures are. And then you need to look at what if things are ideally stronger, and no one would complain about that, so that financials are looking better than you anticipated. Although with part of that, you might also have to think about hiring and how that might impact. But also, what if things don't go as well as anticipated, whether your estimates for demand were off, whether something happens in the economy, and what if, the numbers are just lower, and what that means both to you, an impact to you financially to sustain your needs, your goals, and then obviously how that impacts the business in terms of how it can support the ongoing needs or employees that you might have. And then also, as you put this all together, coming back to getting the business launched, you need to have a very clear understanding of what those early finances are going to look like. The setup costs that we talked about, having the equipment that you need, creating any legal structures, getting insurance set up, as well as how you stand financially. Because if there are risks in starting the business, which inherently there are always risks, how does that impact you financially? It's really important. We strongly recommend for anyone who is launching out on their own that you have deep personal funding, because you might need to tap into your resources, which is extremely common in starting a business to get things launched. and to weather some downturns. Hopefully there are none, but you need to be prepared. And then, as I mentioned, part of the very important part for yourself and having a business plan, but distinctly if you need any financing, is looking at your opportunity to obtain business loans and looking at whether they are going to be attached to you personally or the business in terms of what exposure you have financially. And, that's something that you want to start early on, obviously, to have the funding available to you. So with that, I'm going to transfer things over to Chris to get into considerations on the tax side of things, because running a business is very different from a tax perspective, and then various entity types, because you can set up as a solo practitioner or there are multiple structures that you can opt for. So Chris, I'll let you take it away.
Yes, when starting or choosing the business type, there's a lot of factors that go into play in your decision. Sometimes, how many owners are there going to be? What's your future flexibility in sharing profits, losses, etc. Another big aspect is the employment taxes. And if you're going to be a sole practitioner, that you're going to pay self-employment on your net income. Or if you choose possibly for S Corp, C Corp, there's different factors in doing payroll, et cetera, et cetera. Just note that Social Security is 6.2% for both the employee and employer. And if you're self-employed, you got to pay both sides of that, including Medicare. Medicare is the 1.45%, and then self-employed, you're paying both shares of that. And if you're a high net worth individual, and depending on the threshold, starting at $250 for married filing joint, you're going to have to pay additional Medicare tax, which is 0.9%. So this adds up, and the limit for Social Security for 2023, as you see below, is $160,200. Next slide, please. Now, in choosing your entity types, and it's increasingly become more important what type of entity, and you'll also see on the next slide another wrinkle that came into play for a lot of state returns. But for the most part, the choices between the sole proprietor, LLC, which you could also be a disregarded entity and be treated as a sole proprietor, which means that you file a Schedule C on your individual tax return. If there's more than just one owner, there's a general partnership, and then you could also do entity classifications and become a corporation. And when you become a corporation, you could choose between an S corporation, where the income is not taxed at the business level, but pushes out to you individually on a K-1, or everything could be held within inside this C corporation and taxed at the C corporation, and that there's a double taxation when you pull the money out. But in paying yourself, you always got to factor in, again, Social Security, Medicare taxes, and the additional Medicare taxes all throughout all these business entities. There's also special limited liability protection, depending on the type of entity you choose. So that also is a big factor in what kind of entity you choose. Next bracket. Next page.
I'll just chime in on that liability protection, that also comes back to the insurance that you might need in terms of protecting yourself and the entity type, and then insurance coverage you might need to protect yourself personally.
Correct. So this is fairly new for most states. If you live in Virginia, it's fairly new as of 2022. But the big thing is, a lot of people were, if you itemize your taxes, you can only take up to 10,000, and they call that a SALT limitation on your Schedule A. So this pass-through entity tax is catching on through most of these states, and what it allows you to do is pay your individual state income taxes through the business entity. You have to be a pass-through entity. Unfortunately, filing Schedule C, being either a disregarded entity, LLC, or sole practitioner, doesn't qualify for this. But if you file an S corp return, partnership return, you could take this option where you pay the state taxes and you thus reduce your federal income taxes through this vehicle, which is fairly new, like I said, for most states, and most states now do offer it. It's a great way to pay less taxes on the federal tax level. Next slide. Now, when starting a business, there's all the little taxes that maybe aren't upfront that people don't think about. But in some states, you got personal property taxes. So you pay taxes on the equipment that you purchase. That includes computers and office furniture, et cetera, et cetera. And depending on local taxes, some have gross receipts taxes. So depending on the county that you're in, you may have taxes as well. And the big thing, state taxes, a lot of, even as a sole practitioner, sometimes you got to look at where your customers are located. States are getting much more aggressive, and it creates what's called nexus. So even though you don't have a physical presence in another state, you have to be aware if you have clients in other states, if potentially you create what's called a nexus. And there's tests for that, and that's something just putting it back in mind to consider. Next slide. So in part of setting up a business, the most important thing is you want to separate your business account from your personal account. So you always want to establish a dedicated bank account. A good way to utilize your cash is sometimes open up a credit card, and it gives you some time and flexibility to make payments. And also nowadays, ordering stuff online, credit cards are very helpful. You always want to track your income and expenses. QuickBooks is a very easy software to use. It's easy to set up, and also gives you an online function where you could share it with your accountant or your bookkeeper, and multiple people could be in your books at the same time to help guide you along the way. Maintaining your records is very important. Reconciling your cash, reconciling your books is very important. The more organized you are, you'll realize the easier and more efficient to run your business and know what the outcome is. Next slide. Okay. Always when starting a new business, you always got to factor, do I need an accountant, someone to help me with my tax returns? How much volume is the bookkeeping aspect, to retain a bookkeeper? And then depending on the entity, and if you're gonna have employees, what payroll service am I gonna use? Am I gonna do, because you could do payroll service yourself, or you could do it through a software, or use an ADP or Paychex type system as well. As always, running a business is very important that you monitor your profit and loss statement. You got to make sure that what you're doing, you're making a profit doing it, and you're covering your expenses. Going back, you always want to reconcile your accounts. Reconciling cash is the most important thing. That way, once you reconcile cash, you know you're capturing all the data inside your books and records. And of course, most important, when you have net income, you always want to make sure that you're paying your quarterly tax estimates to avoid any penalties and interest when doing your personal tax return. All right.
So I'll just say before we move on to topics of deciding if this is right or wrong for you, some of the points that Chris made and that we frequently see with clients is, as they sometimes come to us after they've started a business, is that surprise of the additional taxes that they owe, particularly the Social Security and Medicare taxes, that jumps from 7.65% of your income up to 15.3%, which is a meaningful number, and makes your financial hurdle a little higher in terms of what you need to earn. And then again, remembering those quarterly payments, because you do not want to get in the year after you start a business and get a surprise tax bill from missing those payments. So thank you, Chris. So putting that all together, looking at the financial aspects of starting a business, looking at how you're going to price it, if you're going to do well, if you're the type of person to be a business owner, there's a lot to put together, and then you ultimately have to make a decision. Does this make sense for you? There are a number of things to consider, both personal and financial. On the personal side of things, you really have to think about how much time is going to be involved, because running a business is a little bit different than being an employee. You might already be working long hours, but if you're not, then it's likely that you will be. And I think Chris, as a business owner, will probably attest to that as well. Obviously, you need to look at your finances. Coming back to those early financial days, or what if things don't go as planned in your financial modeling, or how things pan out in the business. Do you have depth in your own finances to get through the initial phase or any downturns that you might have? How might that impact on your financial goals? How that might impact on your life goals? And obviously your relationships with others, because there probably will be a time factor, as I mentioned before, and there might be a stress factor that might be new in your life. On the topic of financial goals, you really have to think about what you see or want on the horizon for yourself. Obviously, that can be a multitude of things, but some common things to consider of, if you want to buy a home, that requires a significant down payment. Could the capital costs of starting a business compete with some of these other objectives? If you want to start a family, children, they're wonderful. They bring an immense amount of joy. They also bring financial obligations, and making sure that you have the financial flexibility to do so. Traveling. Are you still going to have the budget for the travel, the entertainment, the lifestyle that you want to live or are accustomed to living? And then, as I mentioned, don't forget about retirement. There's the here, there's the now of pricing things, of making sure that you can sustain a business model, but don't forget about the long term in setting up a retirement plan, funding a retirement plan, replacing that matching contribution, etc. And then don't just leave it to yourself to make the decision. Really look to others for reflection, look internally, look externally, to make sure that you are making the best decision for yourself. Talk to your family, talk to friends, run ideas past them, whether it be about you as a business owner, whether it be about the product or service you're thinking of offering, whether it be about the industry. Just gather input. You can also talk to colleagues that you know, whether people that you're working with now. You could do informational interviews. There's a whole host of different ways you could source that information. You really have to think about your strengths and your weaknesses. And this is something we talk about with new business owners, that you have to wear a lot of hats. You have to, as I mentioned, you might, if you're providing a service, you obviously need to know that you have knowledge in that area, that you can bring information and quality to the table. But as I mentioned, you also have to put on a marketing hat. You need to, as Chris mentioned, have the financials in order, or maybe you can outsource that to the bookkeeper or accountant. But there's a lot of things that you need to manage, whether it's, filings for the company, having the insurance, looking at the employment structure. You also have to think about whether or not you are an entrepreneur, and if you're a long-term business owner. Some people are good at starting a business, but might not be good long-term in running a business. And conversely, some people are good at running a business, but not necessarily getting it launched. Some people are both, but you have to really think about what your niche is, and then how that impacts the long-term vision for the company. With that, what's your time commitment? Long-term in the company, as well as getting it started. How much are you willing to put forth to get this off the ground and keep it going? And then what's your risk tolerance? Just like how you have to evaluate your risk tolerance as an investor in the markets, you also have to think about how much you can psychologically and financially sustain risk, because that's inherent in being a business owner. So we've covered a lot. We're going to open this discussion up to questions. There's a question and answer feature or Q&A feature within this webinar that if you would like to open that, Kathy Jaquette of our team is here to relay the questions to us and hopefully provide some insightful answers to you.
Yeah, and Jennifer, I just want to add one thing. When starting a business, it's also a very good idea knowing what your end game is, knowing what your exit strategy is. Like, how do I get value out of my business down the road?
That's a very valuable point. Thank you for bringing that up, Chris, because some businesses do have end value, others don't. So a prime example is if you are a consultant, that's probably not, or perhaps not, a business that you can sell to have an end sale price, whereas other businesses distinctly have value that can affect your long-term bottom line. So thank you for bringing that up.
All right, we have our first question. How do you go about determining how much to pay yourself or what should be retained in the business?
All right, I'll take the first stab. So depending on your revenue and your net income through the entity, one of the guidelines for the IRS is you need to take reasonable comp based on your industry. So there's a little bit of a factor of trying to know what your peers pay and what kind of job I do, also based on the industry that I should take. IRS would always like you to get to the FICA limit, and there's a little bit of that. Make sure you get to that level potentially. Another aspect, and some entities do, once they pay themselves, they tend to want to leave enough cash to cover maybe 3 to 6 months in their business. Make sure there's operational cash for down the road.
And I would just add to that, that another thing you need to consider is as your company grows, if you might need to hire employees, because you need to have some reserve and extra revenue to support that income. So it's not like you can start somebody off. Typically, you can't start somebody off just paying them $1,000 or $5,000 until your revenue climbs up to meet the salary. You need to have that extra buffer in your financials before you bring somebody on.
Yeah, and you also got to factor in taxes, of course.
Yeah.
With your distributions or payroll.
Kathy,
All right.
go ahead.
If my business goes through an extended period of not making profits, what can I do to prevent the IRS from classifying it as a hobby?
That's a great question. One of the things you have to do is show that you're soliciting, you're bringing on clients, actively engage in it. It also depends on the industry as well. I mean, if you're showing losses 3 years in a row and you don't show any revenue, that's going to be classified probably as a hobby. But if you're actively showing that you're going and you're spending money and you're improving your business and you got a game plan and you can prove that, that's a defense to show that you're in business.
Okay. Can I use my business income to fund retirement accounts for family members?
So typically, well, you can pull the money out as distributions, right? And then if you're going to fund other members, you're technically giving them a gift personally. You can't do it through the business unless they actually work for you. So depending on your structure and what they do for you business-wise, that would be the way to possibly look at the retirement options for them.
And I would just add to that, if a spouse might be deriving an income, it needs to be legitimate. And you need to make sure that if you're audited, that, you can really substantiate the work that that individual, whether it be a child, whether it be a spouse, that what they are providing to the company.
Okay, as a business owner, what is the most rewarding part and what has been the toughest part?
Well, that's a good one, Chris. We can both comment on that, I'm sure. I would say they might be the same answer in my case, that time can be sometimes more flexible, that if you need it, but also time requirements can be greater depending upon what's going on with the business. And at the end of the day, the buck stops with you in terms of getting things done and making sure that things are going well. Chris, what are your insights?
Well, exactly the same, but to add to it, it's also very rewarding that you're controlling your own destiny. You're making decisions, you're help building what you worked so hard for. So the reward is your hard work pays off, hopefully.
And also your goals. I can say in our instance for running a business, there's a quality of service that I want to bring to clients. And I know that we can fulfill on that here versus being an employee somewhere else where it might not happen.
Yeah, sometimes you get stuck with the red tape of a large organization.
All right, thank you. That is everything I see. That's all the questions I have.
Okay. Well, thank you to everyone for joining us. Chris, thank you for giving us your tax and accounting insights, which are incredibly important in getting a business started and operating. Kathy for facilitating, and we wish you a good day. Thank you. And good luck in starting a business.